Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 16th, 5:15 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we remain in an uptrend. You can see over here on the trend gauge. Leaders, fine, bullish slash neutral. Short-term 21-day exponential moving average, bullish neutral with the stop sign. We'll talk about that in a little bit. This is has been on there for, this is the third session now that I've had this on there. Medium-term 50-day moving average, green, bullish. Long-term 200-day moving average, we are still bearish on a downtrend, but we do have three indexes above the 200-day moving average. Unfortunately, they're not the two indexes that we prefer to be over are not over. We'll talk about that momentarily too. So what just happened today? Had that stop sign up because we've been extended from the 21-day moving average for, as I said, three sessions now. But the market didn't seem to care. Well, it appeared to care at the open when we dropped. We gapped down 0.25%, went a little bit lower than that. And then a strong rally right up into the 200-day moving average. Hard negative reversal after that. But we did finish green after that. So mixed bag today. The obvious 200-day moving average, sometimes obvious doesn't work in the market. It did today. The algos fired right when we got there. You'll see a lot of volume, a harsh pullback after that. When we rejected there, we put a little bit of a hedge on, and we bounced off of those levels. So really a win for the bulls today, despite the rejection at the 200-day moving average. Growth lagged on the day. G6 down 0.7%, S&P positive 0.2%, NASDAQ 100 lagged all day, down 0.23%. Dow was strongest with Home Depot and Walmart up, and the financial strong today. When you see that, when you see financial strong, that's usually a sign that the Dow is going to outperform the NASDAQ 100. And the Dow was up 0.7%, mid caps up 0.6%. Russell barely negative. Global diversified 60/40 stock and bond down 0.08%. Our in-house flagship GROTECTION portfolio down approximately 0.09%. Let's get to the charts and the tail of the tape. But first, let's get to a description of why we do what we do here at Revere. And let me bring in one of my favorite charts, the drawdown chart. This is 13 bear markets since 1968. 6 of them severe, meaning over 30% loss. 7 of them quote unquote ordinary, meaning the losses were in the 20% range. Sequence of returns is why we show this. If you're heading into retirement your last couple of years and the market gets a massive sell-off, your plans for retirement can be changed drastically. I don't think we see senior citizens bagging groceries at grocery stores because they want to. They're probably there because they have to. And I talked to several of them after the crash in October to March of 2009. They were ready to retire, had everything set up, did not get out of the way. 57.7% drop in the S&P 500. Even if you're not retired, to get back to even, the market has to be up 136% from that. This back to even column just emphasizes why we do what we do. The gains that you need to get out of the way when you can implement, to us, fairly straightforward stop losses. All of these bear markets occur after you get below the 200-day moving average on the S&P 500. If you just lighten up there, wait for the seas to calm, you can save yourself a lot of financial and mental capital. So that summarized, we participate in uptrends when the market's going higher, like late last year. This is our preferred setup here. You got the 200-day long-term moving average. You got the red line, which is the 50-day. You got the green line, which is the 21-day. When they're all trending higher and prices above it, no reason to be concerned with the market. You can sleep well. When things start to roll over, Sometimes they only roll a little bit and they go sideways. This is a consolidation. We back off the market a little bit. Market can only do one of two things: trend up, trend down, or go sideways. And strength comes back in, we get back in. Weakness rears its ugly head, we get back out. How far we get out depends on how weak we get. When we get below the 200-day moving average, we get the heck out of the way. Start to rally a little bit, we'll dip a couple toes in the water, as we have 6 or 7 times throughout this year. But most recently, down here is where we got back in. When we get above the 21-day, we want to take it, dip really half of a foot in, let's say, so we can quickly take it out if it fails, like it failed here, it failed here. Those are paper cuts. We can recover from those, but you get this nice big trend here after you get above the 21. This takes care of all these little losses that you see when things are a false start. Nothing's guaranteed in the market. You have to put a little bit of capital at risk in order to catch a nice strong trend like this. But we trended higher across, got above the 21, got above the 50. That's our short and intermediate term trend lines. And then today we ran into the 200-day moving average, which I've been talking about for a while. Rejected at the first try. Let's go to a 5-minute chart here. It should be pretty obvious where the algos kicked off when we got to the 200-day moving average, 43.25 here. Look at the volume come in on the rejection. When we got back below 4,300, we put the hedge on. We bounced a little bit since then, no problem. We've got over 20% gains on our SSO position since we entered it here. Now we're hedging half of it, and let's just see where this takes us. We go sideways for a little bit, let these shorter term moving averages catch up. We go above the 21, we're going to take the hedge off. We're going to get back into even heavier into the market than we are, but we've got 11 leading stocks right now. Happy with the way we've got gains in every one of them. We sold one thing that we weren't up on today since we bought it, and let's just see where this plays out. We've raised our stops the entire way up here. We've made enough that we won't go negative since we re-entered back here on July 15th. And now that we ran into this big resistance area, we'll see where the market takes us from here. Let's go to the NASDAQ 100. Not quite into the 200-day moving average, but I do want to point out twice this year. Let me get rid of this very quickly. Twice this year, when we ran into the 200-day moving average, here's the first time, here's the second time. It was the NASDAQ 100 that caused the negative reversal both times. The S&P poked its head above. Now it's the S&P that got rejected there. It could be that the S&P goes a little bit higher. There's a big level at 43.67 that we're watching, and that might coincide with the NASDAQ getting into the 200-day moving average if we continue higher, if we're going to fail there. Not predicting anything. We've always got a plan for bull case and bear case, but for now, the NASDAQ 100 continues to mildly lag the S&P 500. Let's take a look at the Dow Jones Industrial Average, second close above the 200-day moving average, looking very strong here. That's showing relative strength today. Hasn't shown relative strength despite this nice price action during this move back up, but that's typical because on a strong move up, the Dow will lag the NASDAQ 100. Let's take a look at mid caps now. Mid caps and small caps have been leading this parade as of late. 3 closes above the 200-day moving average for mid caps. Small caps, second close, third close above the 200-day moving average, although negative a little bit on the day. But the pullback came to the 200 and it bounced there. That's a good sign. So those are our indexes. Let's go to the tail of the tape here. Put call ratio, this is kind of the lowest it's been in a while. VIX under 20, fear and greed up to 57, that's mild greed. Some news today, U.S. industrial production beat estimates, and Walmart, this is huge. Walmart came out, reported earnings, and this really gave the market a boost because they said what they perceived to be their sales when they lowered their guidance for the last half of the year, they're going to stick with that, which means they didn't have to drop it anymore. Let's take a look at Walmart. Sometimes gaps down put in the bottom in certain situations. And if you look at any retail stock, this is the case. Uh, July 26th, the market had already bottomed prior to this. Walmart came out with a big gap down that hit the indexes and hit retail. But that was it. That was as low as we got. 120 was the bottom. We worked our way higher, pulled back a little bit, and then today they reported earnings up 5% on 267% average volume. Maybe everybody, maybe retail and the market is looking 6 months down the road and things aren't going to be in a recession. I don't predict things like that. I just follow the price and volume. It's nice to have an explanation for things sometimes, but it's not necessary in the market. You got to follow the price and volume. And right now, all of retail bottomed. Well, not all. I'm sure there are some that haven't. But let's take a look at XRT. 726. Here's the gap down. 726 at its high. Since then, in a nice, smooth, steady trend higher, coming into the 200-day moving average now. But let's see what Target says when they report tomorrow. They gapped up today, but they don't report until tomorrow, so that'll be interesting. Some volume in Target too. But all the dollar stores, Costco, everything pulled back that day on 726 with the Walmart news, and everything bottomed that day also. They've just continued to go higher, and now with Walmart saying the deterioration has stopped. They said they've canceled billions of orders to get their inventory correct. I'm sure a bunch of other stores are doing the same thing, but the price action is the price action, and that's what we're seeing right now. Let's get back to the S&P 500, and let's get back to the tail of the tape. Still noting caution because the S&P has extended 4.7% over the 21E. We were only adding we added a couple positions on extremely low risk today, some things that we really wanted to get into or increase our positions on. But we closed today 4.4%, despite the fact that we're going higher. We're going higher at a slower rate than the 21-day moving average is going higher. And if we just go sideways a little bit, this will close the gap in a couple of days or a week. We'll be right there. We won't be as extended anymore, but now we've dropped to 4.4% above the 21 on the S&P with today's close. So still extended, but a lot of strength today until we ran into that 200-day moving average. So my expectations coming into today were for bullish and sideways action after the 810 breakout. We got that up to the 200-day moving average before we reversed. Let's see what happens overnight and into tomorrow, and Target will probably play a key role in that when they report tomorrow. From an emotional standpoint, exercising patience with holdings is really something I've been working on now. Trying to work on now, giving them the room that they need to, but keeping anything on the downside capped. And we sold Bros today. We'll talk about what we sold when we go over the portfolio review. As far as support and resistance today, worked our way above this 4,300 level. Into this 43.26 200-day moving average where we reversed, got back under 4,300, but then got back above it again. So above, reverse below, and back above this 4,300 level. We might be playing ping pong around this level for a while until things chill out a little bit and aren't as extended on the indexes. On the NASDAQ 100, this 330 area, we had an undercut and back above today despite the weakness in the NASDAQ 100 today. Here's the action, gap down, we based sideways, breakout at 11.15 up to the 200-day moving average, negative reversal there, and then up to 43.05 at the open. What was strong today? Nat gas. Oils started out strong across the board, all green, deteriorated during the day. Anything not nat gas related was red on the day, but nat gas and our LNG holding had a nice day. Also, that's nat gas related. Retail, the big winner on the day, XRT. I already showed that chart, up over 4% on the day. Staples were good, banks were good, base metals were good. Some recent winners, TAN and biotech, took a little bit of a break. Value outperformed growth today, as you can see with the G6 being down 0.66%. More than the indexes were. So it was a value day, a retail day, a financials day. Those are defensive. So that's what that's what took the baton today. on the market. So we came in with a 1.16 beta, sold VTIP because it served its purpose. What this is an inflation protected short-term bond with a 5.5% yield. We got one dividend out of it where we bought it at, I think, right around this 50.38 level here. So we're down less than 1% and sold it, rejected into the 50-day moving average. Time to take that capital and get it ready either to hedge if we're pulling back here, or to put it into some growth stocks that are continuing to act well. So we got rid of VTIP. We also got rid of Bros, our 1% position there. They had an offering overnight. It gapped down, reversed yesterday at the 200-day moving average. We just took our loss on this. It was about combined, we lost about 0.25% on it. We like to cap our losses at 0.2%, so a little bit more than normal, but certainly still what I consider a paper cut and easily to recover from. QID, we got out of this hedge on red when we were down earlier in the day on the Qs, and then we put the hedge back on with the SDS when we broke below that resist, when we failed into the 200-day moving average. So kind of just trading one hedge for another. But this one SDS will stay in sync with the SSO. And you say, why don't you just sell the SSO? There's a couple of reasons. One is because it's a taxable gain and taxable accounts on those. Another one is from a mental standpoint, it's easier to just put a hedge on and take it off than it is to sell something and to buy something. Raise your eyebrows if you will, but that is a fact. It is with the guy sitting in this chair anyway. So SWAV, we added, again, this was something that was lower on the day. We actually came into today talking about wanting to take half of this off because of how extended it was, but it ended up pulling back, giving us, this bounced like right at the 5 exponential moving average, which isn't shown here. And we added 1%, so we took that position up from a 2% to a 3%. The way this is acting really has my attention. This is a serious strength on Shockwave, so we added to that. We also, at the top of my buy list, per our discussions pre-market, were this GFS, these big blue volume bars on the upside, and then after earnings, another one very strong. Should have bought this actually through this 60 or 61.88 level on Friday when it first made the move. I didn't. Gave me another opportunity. Inside day on Monday, pulled back again here. When it went from red to green, we bought a 2% position on that. So that took our net exposure from 1.16 to 1.12, and summing up the day, we went up to the 200-day moving average, failed there, but a new recovery high close above 4,300 on the S&P today. And that's where we are now, and let's see where the rest of the week takes us. We continue to chip away at all of these what were resistance levels now become support as we get through them. 4,300 is one that we're at right around here. 43.26 on the 200-day moving average where we reversed today. 43.67, a big level on the upside. That's a big fib level. I have a thesis that we may get up to there and that caps it, but not predicting anything. We'll see what happens when we get there. But for now, this next level of resistance stood today on the S&P 500. We'll see if it continues to stand or if it's just a little bit of a pause and we continue higher. Let's go through the rest of the portfolio for what we own here now. Let's start with, I showed Bros that we sold. Let's go with MPWR. Down 1% on the day, just consolidating this nice move higher. ON, the other semiconductor that we own, nice consolidation today on lower volume right at that 70 level. We added GFS today, as I mentioned. So we actually have 3 semiconductors. I'll cap exposure in one particular broad area at about 12% of the portfolio, but one of these is a semi-manufacturer, the other ones are fabless, so it's not that much of an overlap, although they do tend to move together. Let's see, what else do we own? Silvergate down big early today. Doesn't look big because of how wide this chart is, but it bounced right where it needed to and closed above the ADMA. Basically everything that you look at that has gone higher and has pulled back is pulling back to the ADMA unless it breaks. Things that are breaking the ADMA are showing relative weakness. So we're keeping an eye out for things that are breaking and then not closing back above the ADMA on the same day. Net was weak early in the day. Where to come back to? The ADMA, and it bounced. Thank you for that. Enphase Solars with some weakness today, below the ADMA, closed just a tick below. That makes, for me, that makes today's lows very critical on Enphase. We knew it had to consolidate this level, but let's see what happens the rest of the week on Enphase. Let's take a look at TAN very quickly to see how strong that has been. And now this is putting in a nice little triangle here. You could almost argue that it's 2 inside days, although this did make a higher high, but right at the ADMA TAN. We don't want this to break down below, certainly below Friday's low. So I'm going to put an alert there at 86.71. Alerts are really such a key to success, because if you're not having active alerts telling you what's going on for things that you're interested in, you're just really flying blind. So that's TAN and Enphase. Let's go to LNTH, another leader. We got double-digit gains on this. Bounced at the ADMA today, just the way we wanted it to. And Shockwave, I talked about how we added to it on this pullback today. In our largest position, LNG, at 6%, bounced at the 8 yesterday, closed high in the range, gapped up today, and held that gap because the LNG-related stocks had a good day. Here's another one that Michael brought to my attention, EQT. He's going to talk about nat gas in our podcast this Friday. Closed at the low of the range, but that was a very strong gap up, and it's a breakout of this cup and handle. So if you're looking for something oil and gas related, focus on the gas, not the oil. And let's see, that is going to wrap it. Oh no, we still have Apple acting well. Very well. Amazon briefly got above the 200-day moving average today, closed just barely below it, but note there it's riding the ADMA higher too. The ADMA is really containing these moves up for not only the indexes, but a lot of stocks also. And that's going to wrap it. As always, love to hear from you. Email me, don@revereasset.com. Phone 855-REAL-WEALTH. That's 855-732-5932. So wrapping up Tuesday, 8/16. Let me remind you very quickly one more time, the most important chart for investors. Just eliminate big losses and you'll be fine. Thanks for listening. Have a great day.